All right, good afternoon, everyone. And we are down to the finale. Yes, you made it. Whoa, I know it's been, I want to thank for everybody that you stayed all the way down to the end. And we're so appreciative. But we saved the best to the last, right? The secondary market trading. And we started it early as well. So it gives them a little bit more time so you can listen to the new evolution of the private market. This is how you are going to inspire those investors to you now have something different to add to that equation. Your exit isn't just being acquired or going public. Now you can say your securities can trade on a registered secondary ATS. And I'm going to let Kiran Galimela, our Chief Scientist and Technology Officer, KoreConnect, lead us off. Kiran, it's all yours.
Thank you, Oscar. Well, as Oscar mentioned, we are at the tail end of this session, but I don't know why they call it the tail end. I mean, this is the real beginning of the journey. And we always think about secondary markets. And I personally think that the moniker secondary market for something like this, it really should be called the primary market. Everything else is sort of secondary to what happens now, right? Because this is where the real fun begins. It's like you're born, 9 months of labor, right? But after that, you've got your whole life ahead of you. So most of the time that securities will spend is very little on the issuance side, of course, and we have to get it right, very compliant and everything else. But once you're done with that, then what, right? I mean, this is kind of where we see a lot of exciting things happen. So I'm the chief scientist and CTO for KoreConnect, and I've been in the space of financial securities and in financial industry for many, many years. And I would like to welcome our speakers. I would turn it over to each of them and say, please introduce yourself, briefly, and then we'll get started. So maybe start with you, Lee.
Great. Hey, thank you, Karan. I'm Lee Seba. I'm head of market structure for Rialto Markets. We are a broker dealer. We run a secondary trading platform, also known as an alternative trading system, which is SEC and FINRA registered. My background has traditionally been in financial services. Prior to Rialto, which I've been here for 2.5 years now, which is going by quite quickly. But previous to Rialto, I spent approximately the last 18 years at Wellington Management, overseeing their electronic trading infrastructure. And I like to say I've done the Boston trifecta, where between Wellington, State Street, and Fidelity, I've got the Boston financial services covered, I think. So thanks, Karan.
All right, hey, that's awesome, Bob.
Sure. Bob Yospeel. I'm the head of administration here at Oasis Pro Markets. We are an ATS that's approved to trade digital securities for digital cash. It's a multi-asset platform. I joined the firm in January of this year. Prior to this, I spent 20 years at Credit Suisse in a variety of capital markets and investment banking roles. Then moved over to Bank of America and the Royal Bank of Canada, where I help manage fixed income trading technology.
Awesome. Richard? I don't know if we have Richard or not. There seems to be some spinning connection issue there. But while we wait for anyone else to join, I want to get your opinion on something. You all have, so much experience, Lee and we've talked quite a bit about stuff like this. And Bob, you have tremendous experience in this space over a number of years, right? And for most people in the space, our experience has really been in the public markets because they're the most visible, most sophisticated, and newsworthy all the time, right? Now, the theme of this entire KoreSummit has been the Dare to Dream. And I'm excited because I have to believe that we are at this juncture right now, nexus point, when what happened over the last 100 years in the public markets is now happening in these private markets. What's your sense? I mean, do you carry that same sense of excitement? Do you feel that?
Sure. I can start, Bob, if you're okay. I think it's fascinating, and I think this is just a natural extension of, a market's evolution. I mean, some of the stats that you guys have put out as KCX, and I know, Rialto, and I'm sure Oasis has as well. There's approximately 30 million private companies in the United States alone, right? And, they're inaccessible for the most part to investors. I mean, and if you look at the public markets, these days, they're just, it's just a straight decline, heading, straight south as far as folks going to those listings. So, now that you can actually get exposure to these private markets, it's absolutely fantastic. And, especially as a retail investor, because, prior to 2012, it was illegal as a non-accredited investor to touch any of these assets. I mean, you could not get into early stage Uber. You could not get into early stage Amazon or whatever, and really, hopefully take advantage of those profits. That to me is super exciting. But what we're here to talk about, I think, is the next step, right? Step one, it's a two-step dance, because now you actually have a secondary trading platform, which again, we can, there's an on-ramp and an off-ramp, now for private markets. And I think it's super exciting. And I think, these are, and I've heard our CEO say, a few times that, like, the private markets are kind of the new public markets in a way, right? Because, you now have, access to them. And, I think it's just going to be, obviously there's new market structures involved, but we've learned a lot in the previous markets. And, I think it's just, we're going to leapfrog. We're going to take a lot of what we learned in the public markets, apply them here with the new twists. And, I think the world's going to be a very different place, in the not too distant future.
Yeah, I mean, I completely agree with you, Lee. I think, private securities have always traded by appointment. And if you offer a marketplace where people can buy and sell them and create liquidity, it's not only good for investors, but it's good for the issuers as well. I think what you're seeing in the public markets now, and you see some very kind of, in my view, frothy markets, how much upside is really there. And if you're giving kind of, retail investors, certain individual accredited investors, an opportunity to find what some people call unicorns, kind of in their early stage, and opportunities to invest, I think you can see a lot more upside in the private market than you can in the public market right now.
One interesting point about the public markets is the fact that many of the trades that actually occur in the secondary markets on the public side are basically large program trading, right? Huge block sizes and large program trading and so on. And I'm just kind of curious your opinion on what trading actually means in the private markets. I mean, you don't have that much of volatility or liquidity, but the markets are there. Do you feel that in the private markets, in the private companies, shareholders will feel a lot more connected to their market, to their companies, and have more loyalty, and be much more personally involved and exploring various types of opportunities to trade in these markets versus, it's just simply nothing but a number on a chart and you're just simply trading it somehow, right?
Yeah.
What is your sense of that?
Yeah, I think, in the private markets, especially, when it comes to individual investors, you have in the public markets, you're up against, as you indicated, big program traders. Do you really stand a chance?
Mm-hmm.
You get out of a trade as quickly as somebody who's running some algo program somewhere.
Mm-hmm.
You may blink your eyes and suddenly you're trying to figure out what just happened to your portfolio or your particular position. I think in the private markets, there's no opportunity right now and I'm not aware of anybody who's thinking about creating kind of these algo programs, algorithmic trading models to take advantage of, small movements in the price of a security. I don't think that's going to be the nature of the private markets. I don't know if Lee has a similar view on that, but that's my view.
Yeah, I think the algos would be a ways out. The HFT, the high frequency trading.
Right.
I don't see any arb trading or anything like that coming in the future. Well, I mean, at some point in the future, who knows? But Yeah, I think there is a direct affiliation, to answer your question, Karan, or at least it seems like it, where if you're investing in a private company, you're probably already familiar with that private company, or you've done some research proactively right now. And there does seem to be this nice synergy, where, they're loyal to the company in a way, and the company's loyal to them. And, sometimes, it's like with the tokenization of things, and, the way people are thinking about these securities, you might get, just extra, newsletters or access to an event or whatever, because you are a shareholder. And it keeps it very, very, very cozy, I guess, unlike, and again, I'm not picking on IBM, but if you bought an IBM share, it's like, okay, nobody reaches out and says, thanks, and welcome to the party. So I think that is very good. And I think there's going to be more of that to come. I think there are going to be more of these allegiance style, invest in us and help us help you, and we'll help you, with your portfolio. And it's, I think it's really nice to see. It's pretty good. You can invest with your heart.
Yeah, and I witnessed that kind of firsthand earlier this week. I'm sorry to say I was in Miami Beach only for 2 days. It was 75 degrees and sunny, but back here in Connecticut now, New England. But at a family office conference where there were some companies who were doing their second or third round of fundraising, and having chats with my investors, as they would call them, and close one-on-one conversation, where people on a first name basis with the CEO or the CFO, and it's great to see there is a connection there.
The very first securities transaction I did was way back in, I believe it's 1983 or 84. And it was actually a paper certificate. I had to actually go get a paper certificate, right? It's like, whoa, that's me. And of course, I sold it after 1 week and got a handsome profit out of that one. But since then, I've never seen a paper certificate so far, right? And I'm just kind of curious about your take on. There's a lot of these e-certificates and digital securities now. And for anything that's sort of a bunch of electrons running around versus a piece of paper, there's always going to be some angst around, how real is this, right? How much can I really trust this? And Lee and I, we talked in the past. We have been having these conversations for many months and years. In fact, going back and saying, how can we really use technology to foster that particular trust? How do you build an infrastructure of trust, right? So I'm kind of curious about the journey of how we went from paper trading to paperless e-certs and down into digital securities. And, I believe we're actually ready. We have been doing a lot of innovative works in, the blockchain space, all of us as a collective team, but kind of curious to see what is the general perception of the traditional investors, not the millennials, not the crypto people, but the traditional investors, the people who have the real money, on their perception about digital securities and what it means.
Yeah, obviously, traditionally, it's been, security settled at the DTCC, the Depository, Trust and Clearing Corp. One central location. Obviously, private securities are much different. Right. You, as you know, Karan, are, effectively the new versions of the DTCC, right? You are part of the trust alliance here, right? So, once they're digital securities, or once they're, just securities in general in the private placement realm, we need a lot of different folks in the middle of this, right? We need, broker dealers, we need transfer agents, we need, the ATSs, the secondary markets, and all of them are regulated. They all report up to the same, the same folks, and you have to play by a certain amount of rules. These are not ICOs. These are regulated securities. We're not talking about, fly by night things. Are just like, give us your money and your wallet address, and we'll throw you some stable coins, and don't worry, trust us, we're good guys. It's a regulated environment, and again, it's new. It's a much newer environment, but we're in the, I would say, I'm not even sure, in a extra inning baseball game, I would say we're probably, just taking the field.
Okay. Yeah, I think that's probably right, Lee. And I'm sorry to say that I was around back in the late '80s, and there are actually runners on Wall Street who were moving certificates from building to building,
Yes.
right? And then we evolved into something called the Bloomberg terminal, which was amazing. And then as technology advanced, all trading really is electronic, and I think most investors would agree with that because they could log on to their Fidelity account and make a trade, and it will appear in their account. They don't have a paper certificate.
Yep.
So, I think in many people's mind, they would say, well, don't we already have digital securities? And I think in some sense you do. The difference, I think, is just the tokenized concept and the ability to settle it, very quickly on a blockchain. But I think people generally understand the electronic nature of a digital security because they've seen it for the last 20 years, 15 or 20 years. And security tokens, I think a lot of them are just viewed as the next generation. So I don't see a lot of hesitancy, and I don't see some concern. People do talk about hacking and hacking wallets. But when you can assure them that their tokens that have been stolen can be burned and disappear, new tokens are reissued, that gives a lot of comfort to anybody who might be hesitant about participating in these markets.
Yeah, and I think many of the people who are seriously concerned about the safety and security of their tokens might have had bad experiences in the cryptocurrency space where, those are, sort of bearer instruments, right? You own it, you have it, and you're done with it, right? Securities are non-bearer instruments, and, many people don't, quite understand that particular distinction. And, everything we talked about, this whole KoreSummit and previous KoreSummits have always been about compliance and safety and security of transactions and allowing, good players and good actors to be on the networks, right? So I think all of those kind of go hand in hand. And but in terms of just going to investors and going to issuers and companies and assure them that all of that infrastructure mechanisms for ensuring compliance, safety, security, recourse, recovery in case of losses, right? All those things are actually in place. Now, I know they're in place because, we have been engineering some of these things, Lee knows this, and, many of other colleagues also know this. So we engineered, but how would we continue to educate people that the infrastructure exists? This is not a 5-year forward-thinking plan. It is here now, right? And it is quite ripe for taking this into account. So, what's your sense of that, Bob?
Well, I think it's interesting. In this new world that we're in, safety and security is paramount to anything. Everything that we do is online. And it's interesting in my mind that for Bitcoin, you've got a password that if you lose, it's kind of gone forever. So is that safe and secure? You tell me. That's a different version of safe and secure.
Right.
So I think safety and security is something that everybody has in their mind. Cybersecurity is the things that will keep us awake as we launch. It keeps a lot of people awake. Coming from the big banks, I was always aware of issues around cyber and hacking. Got to the point you no longer have USB ports on your personal computer under your desk, right? They were disabled. Nobody was allowed to plug in. So.
Yeah, I think that there's definitely a comfortable factor that people need to get used to, especially if they're in the traditional, financial service realm. But, I guess I would hearken back to the early days of the internet. Like, I remember I had, family members and friends, and, when online banking first showed up or a transaction online, like, I'm never doing that. I'm always going to the bank. I will never put my information out on the internet. And it's like, okay. Look at us now, right?
Right.
everything's out there, and we trust it, right? But it took a while. It just took a while, But I think what's going to happen is just going to become synonymous. Like, when I go to the ATM, which is actually even dating myself, I don't even go to the ATM much anymore. But when you do, right, I don't think about the database behind it. You just want your money. Does it work? And you're not going, boy, is that Oracle behind there? Is that Sybase?
Exactly.
What's going on there?
Exactly.
Who cares, right? It did its function and it delivered you, what you were looking for. So I think this is just an evolutionary process. And once we, it gets real liftoff and people are just, pinging back and forth, they're not even going to think twice about it. It's just going to be part of the process that you just don't even think about, like when you turn on your water, you don't really think about all the plumbing behind it,
Right.
Exactly. Where does it all come from, right? Mm-hmm.
Yeah, like you say about ATM machines, I don't think about them anymore. And I'm also I'm embarrassed. I don't know about Lee, but I don't recall the last time I even tried to balance a checkbook because it just works.
Oh yeah, and what's really funny though, Lee, you said we never even want to. It's all online now, and we don't want to go into a bank. I'll tell you something really funny. I was talking to my daughters the other day, and then they're mid-20s now, and they're working and everything else, and they had some issue with the bank account, and I said, yeah, go look it up. It's online, and download the app. They said, no, Dad, we want to go there. We want to talk to somebody. It's like we want to go in the store, and I said, guys, I mean, this don't goes into banks nowadays, and they said, no, Dad, all our friends do that. I said, really? I don't know. So maybe there is a counterculture movement coming on and saying, enough of all the Facebook and enough of all the social media. We actually need to see people. So I'm just wanted to share the little anecdote with you. Yeah, it's funny, right? But here's the interesting part. I want to kind of get your pulse on this one. What is the how do you feel that issuers and companies, right, how do they view the capability for secondary trading, right? I mean, if I were I'm just going to put myself and play the devil's advocate for a minute, as if I'm a CEO of a new company raising capital, and what's in it for me to offer this capability to shareholders, and is there a perception that a company that actually has a secondary market is more valuable than something that's not? So in other words, how do we educate and address this particular concern that any company may have, and maybe they don't have, I don't know, about adoption of a secondary market capability?
Yeah, I think rightfully so. As an issuer, you should ask a lot of questions about how the process is going to work. What sort of things can happen there, right? We talk a lot about, Karan, I know you and I have had this discussion and online and offline about the concept of fluidity, right? And just
Absolutely.
making the path and process just glide through, as opposed to just very clunky and downloading spreadsheets and then calling your bank and transferring money, and just try to make it very seamless. Mm-hmm. So I think that they just have to be a little bit forward thinking and give it a try. I think what happens is like with compensation is a good example with employee stock ownership plans. If there's if the company decides to never go public, and yet they've been compensating their employees with the idea that they're going to be a shareholder, now you're paper wealthy, but you have no way to realize it. So how do you realize it? So we can provide opportunities ourselves, and and Bob and his company can also do similar things. That is part and parcel of the employee's compensation now. So when you pay them in shares, that's part of their net worth. And if they have a life event, if they have they're having a child, they're buying a house, they're paying off college loans, whatever it might be, now they have an opportunity to realize that. The other side is true too. I think everybody always thinks it's an off-ramp. It's also an on-ramp for other investors, right? So you can diversify your cap table off of the initial primary market, right? Get a wider berth, maybe let some of those folks realize some of what they had, and maybe you want to get more. I mean, everybody's like, oh, they want to sell. I think a lot of times is people missed it when it closed, when the round closed.
Exactly right. Yes.
So I think we have to. I think the natural human mindset is like, oh, I bought it, now I want to sell it. It's like, no, maybe I bought it and I want to buy more.
That's exactly right.
So I think that's a lot of different ways.
Yeah, I think that's right. I think a liquid investment is far more attractive than an illiquid investment. And if you have the opportunity to trade, buy more, or exit because maybe you want to diversify into a different sector of private securities, that's terrific. I think from an issuer's point of view, and we've said this before, but especially on a fixed income transaction, a new issuer for a fixed income security, we see savings of 40 to 50 bips really on asset servicing costs because you have smart contracts that can make interest payments really from the push button of a CFO or a treasurer's office. And it'll be interesting to see what happens to some of these big asset servicers that are out there when digital securities really begin to take off, because I think they will kind of eliminate the need for people to do the principal and interest on mortgage-backed security, for example.
Right. So in the general public market, said when companies are generally companies who have an eye towards a public market at some point in time, an IPO or something, they have to do certain things, behave in certain ways, and do certain things in order to be prepared for that event, the IPO event, right? And what would you consider is the equivalent kinds of steps or things that issuers and companies in the private markets need to do to be there where there's a viable, perhaps not immediately, but eventually there's a viable secondary market out there? Are there things that they should be doing and engaging with their shareholders and the general market in a different way?
Yeah. So
go ahead. I'm sorry.
Yeah. No, I think, there are things to consider about how you would engage with your shareholder base, right? And every private issuer has a slightly different liquidity profile. No two are the same, right? And not to say that all, they're the same in the public markets either, but, Apple and, Google are probably, like water, right? They're very liquid. So, you can kind of get that. But if you have 500 shareholders on your cap table and you met your raise very quickly, that liquidity profile is much different than a cap table that has 100,000 investors on it. So you have to kind of think about how many folks you have and how diversified you want to get. And I think there's ways to do it. You can be like a central limit order book, a real-time order book, or you could schedule a point in time cross. So you can aggregate liquidity at a certain time, run it through our regulated systems, and everybody's meets at that spot at that moment, within that hour, and whatever is aggregated, it crosses, and then you wait till the next time, right? Because it's like two boats crossing in the night, right? If you have 500 shareholders and you're looking to get rid of your 300 shares, and there's just not a lot of folks that can, you only have 499 other folks that can cross with you, and it's a big ocean. So why not get everybody in the boat at the same time and see if we can make something happen? So I would think about it. Just everybody's a little bit different, and think about how you want to interact with an ATS and what the options are there for you.
Yeah, I agree with that completely. And I think, one of the interesting parts of an ATS, I'll just use Oasis as an example. We have institutional investors, accredited investors, other broker dealers, and now retail. So you have a broad cross section of investors there. Some are more sophisticated than others. And I think with some of the private securities are probably more sophisticated products than straightforward equities that certain retail investors are used to. So I think when you have a diverse population of participants on an ATS, I think that's helpful as well.
Yeah.
I was just I was at a conference just the other day, and there was a few folks asking me questions about like, what's it take to be private? What do I need to do? What's it like? And, without naming names, these folks have actually raised a lot of money through the VC world. And, I think they're getting crushed a little bit. They're getting squeezed. They're getting told what to do. They're getting told, and, they're losing a little bit of control. And I think one of the things that was attractive to them was the fact that, you can diversify your investor base pretty quickly, right? And obviously you want some VC, you want some high net worth, you want some institutional maybe or whatever, but you also want to, spread it out a little bit. And, I could see their wheels churning, and it's like, like I can raise up to $75 million every 12 months. That's a lot of money. And we're actually doing well, and we're fairly profitable. And I mean, we can still drive the ship as we want to see it. I mean, there's a lot of things there that are happening. Plus, it's just it's a very interesting story, and we still have more to go before we've realized all the benefits here.
Yeah, no, absolutely. Well, one thing I can't help, this is a dare to dream kind of a session, right? So, when you're dreaming forward and you're kind of looking at this stuff, do you believe that the structure of trading going forward in the private secondary markets, is there a danger, or maybe it's a good thing to happen? Will there be a mimicking of the public markets the way they are, continuous pretty much, or 24/7, or are we going to see many other types of models kind of come up in this space? So in other words, is it just going to be the same old, but in the private markets, or are we going to see something really different, right? How do you see that?
Yeah, I mean, that's kind of the point both Lee and I, kind of maybe agreed on earlier around, this particular private market trading. I think will be more, late 1980s, early 1990s type trading between, just counterparties. Will there be, algo traders and quant traders and certain kinds of, other program trading happening at some point? I have to believe it will come. Just the volume in the private markets, I think, is significantly larger than actually the volume potential than in the public markets. So I think that will eventually come. I don't know if Lee has a similar view on that, but be happy to hear it.
Yeah, no, I do think that the algorithmic trading will eventually show up. But growing up in the algorithmic trading days in the early stages, it took a while for that to lift off. And obviously we'll do a leapfrog event because we already know we've learned a lot there. But I agree, Bob. I think it's going to be the fact that we can trade is the magic right now. Right? I mean, the fact that you can trade private securities, just how as simply as it is awesome. And it's a huge, leap in for private markets. But yeah, it's going to get there. I think though, with algorithmic trading and, maybe even, I dare I say HFT, that's a long ways out, right? Because even HFT folks they're not going to dabble in this stuff, right? Because it's not liquid enough. They can't do latency arb on you. They can't, put a microwave, nanosecond, execution. It's just not going to happen, right? Because again, the liquidity isn't there. It's not the same. And they only pick their spots when you see how they do it. They only pick a handful of names and they just know them super well. They know all the market. And, every time they just see an anomaly, it's bing, 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 they jump it. So this isn't that market. This is more of a retail only focused market, which actually should give us some safety, right? Yeah. In a way, it gives you some comfort.
Right. And I think that's, more times than not, we'll see human beings, hitting the button to hit the bid or as opposed to a machine. Certainly for, the next several years.
For sure. Yeah, I think that's about right. The next several years at least, which is great. That's, you get to, touch it and feel it and, drop your orders in. So it's really good. And I think there's also just one other angle too, just thinking out loud was about, being able to put these assets into like an IRA or 401k, then being able to, self-manage some of that, which is, absolutely fantastic. So,
And would you say, Lee, that, in this new world of private securities, that the playing field is more level maybe for investors than it is in the public markets, just with the algos and the high frequency traders, et cetera?
Yeah, I mean, I would say retail has the upper arm right now, by a mile, because, and you've probably experienced this, with your experience at Credit Suisse and some of the big banks. They look at $75 million as a rounding error, at some of these things. They're like, oh, it's not big enough for me, whatever. That's not the case here. And, I think, they're definitely going to get, retail is winning right now. If you look at, how things have evolved in the public markets with the meme stocks and the advancements in trading technology that folks are very, accustomed to now. Before, you had to go to your broker dealer and, pay high commissions and do all these things. Now, you can self-manage this, and, free trading, nothing's ever free. So,
that's exactly right.
Free.
That's exactly right.
Free. You're giving up something. You just don't know what it is yet.
Exactly. I mean, it's amazing. So, I mean, when we think about this whole theme of this as Dare to Dream, right? I have to share with you, my dream, let's say by end of 2022, let's not worry about 5-year plans and 10-year plans and stuff. It's like, next, 1 year, 2022, what is it that I would hope? I want to share this with you and see if you also have this big vision of what you think should happen and could happen. And, one of the best ways to predict the future, as you better said, is to be the future, just make it happen, right? That's the best way to predict it. And so I would think that this whole, the traditional markets and the way they've been working is that there's really not much transparency into the entire process for most rank and file investors and the people who really are the backbone of the economy, right? These are the real people, not the Wall Street people, but these are the real people. And for most of those people, this whole markets and the IPOs and what's happening, the institutional, all the high frequency trading, the derivatives, so many of those things are just very mysterious. There's no transparency, no clear understanding of what's happening. And I have to believe, and I dare to dream, that by end of 2022, I think we should be seeing a sea change in many of the retail investors who are not the real sophisticated investors, but they'll say, yes, I know. I went there, I invested it, and I can see it now, and I can trade it. Everything is very transparent. There is a lot of trust in this one because unlike the crypto space, these entities are all regulated. But just because they're regulated doesn't mean that it's bureaucratically regulated in that sense of the word, right? I mean, there's a lot of freedom, yet there is safety and security. I think that whole shift in that mindset is what I'm daring to dream will actually happen. I would love to kind of hear, some of you can open up your mind and say, hey, here's my dream for 2022.
Sure. Sure. If you don't mind, I'll start, Bob.
Go ahead.
Yeah. I mean, dialing up the crazy, as I like to call it. I think we can look at, some regulations being a little bit clearer. I'm hoping, especially in regard to some of the new digitally native, blockchain native instruments like NFTs, non-fungible tokens. I think if you run those through a Howey test or two, a lot of them will not pass. They are pretty much securities in most regards that I can see. And, again, as an ATS, we would welcome the opportunity to have those traded on our platform. I think there's a big movement in fractionalized collectibles, whether it be art or, I don't know, art or, I don't know, wine or, watch collections or whatever that are of value and have been authenticated. And now you can own a piece of that. And again, put it into your, into your accounts. I think that's fascinating. I think we're going to see a lot more of that. So yeah, I think the future is very bright. And I think, the blockchain technology is actually going to enable this. And at some point, I think we are going to get to an atomic landing place, right? Where, the blockchain will be trusted, much like we trust the internet now to do a lot of transactions online.
Mm-hmm.
And, we'll be able to, almost settle instantly. I don't know if that's going to be 2022, but
yes, it will be. Yes, it will be.
all right, well,
Of course
I
we
think
did.
let's hope so. But
if I was going to dare to dream, I think I'd echo some of the sentiments around regulations and more clarity. But I'd also dare to dream about the emergence of central bank digital currencies, CBDCs, that are truly backed by a sovereign government to enable blockchain transactions. I think that's a key component to what we're doing here at Oasis. I think it's a key component to what's happening across the ecosystem, where you see a JP Morgan coin, or a MasterCard has their own coin, or Facebook has their own coin. I would love to see major government powers kind of embrace that concept and have start to issue CBDCs. I think if you can get there, I mean, the trust in a digital security token would be a no-brainer, right?
Yeah, it's listening to the three of you, it's been interesting. But there's one part, I think you guys kind of touched on it, but the importance of major adoption, and I read it recently in a post which really kind of summarized it really well. We've made such a massive leap to bring investors together with companies. We've streamlined it, we've removed the friction, all of it, all the way through. But there was just one minor oversight everyone forgot, is that nobody upgraded the banks. The banks are still running their
Oh God,
system.
yes.
And I see Lee's face, I see Bobby. You all know what I'm talking about. It's so when I dare to dream, I go, yes, let's keep that going. My goal to everyone right now is, if there was ever a time where we all need to work together and really work together, this is it. We need to come as one force, because right now what's happening is individually everybody's tackling the problem, and here's what happens: when individually we're not all big enough to say, hey, you only do $1 billion, but you bring in Bob and he goes, I got $1 billion. You bring in Karan, he goes, I got $1 billion. So now it's worth $3 billion.
Yeah.
And what I'm trying to get at is, we've recently learned that there is no motivation by the banking sector to do any changes to the back rails. So, which means we need to innovate, and we need to find, but the only way we're going to do it is if we all work together. I am, Lee knows this, because it's our thesis. It's the only reason I created CoreConnects. I will never be an ATS, because I know how difficult it is, and no matter how much I learn it, even if we can figure out interesting, it's not what we want to be. And I don't want to be a broker dealer. It's same thing. All these roles are important. You don't need to replace them, to kind of work with them. And I think that's the other mental set that people need to get into, is that we need this to happen. Where at the moment, if we continue to experience the banking issues, secondary market is not going to explode the way we want it to. And it has such an amazing potential, with blockchain there. Now, if we can just take it to the next stage. So thank you.
Yeah, I think
Bob.
that's right. Yeah, I think, I know you're trying to close up here, but to your point, and, we kind of keep this written in my desk drawer, but Jamie Dimon back in the spring said the biggest threat to the large banks is fintech, because the large banks are kind of handcuffed by legacy inflexible infrastructure that will be incredibly expensive to replace. So,
Agreed.
I think, the ecosystem that we're in, where we can be nimble, where we can build technology on our own, in much smaller organizations, and pivot quickly, is going to make all the difference.
Oh, agreed. And it's all of us supporting that initiative, even though you may think it's competitive. It is, but ultimately the only way we can get these other participants to open that door is they need to see that we're big enough, that collectively it's that's where we need to get to. I think This is where we're going to see every ATS will be successful. I firmly believe that. Why? Because there is at least 1,000 times more private companies than there are public companies. And each one, as Lee said it, I like what you said. Every shareholder, every company has a very different shareholder makeup. There are going to be companies with Reg Ds, and some with the Reg Ds with Reg As, and Reg CF with Reg A. There's going to be some that are going to have institutional. There's enough for everyone, and it's early on. So thank you. I mean it. You guys closed it off perfectly because to dare to dream for an entrepreneur, there's nothing worse than having a vision of something and being able to get through it. And then when you're in front of investors, they're asking, where's my exit? Where is this going to take me? I'm in for 10, 15 years. Well, you can now give them the assurance that they are not there for 10 years. They're there for until you close your financing, you can find a registered ATS and allow them to trade. So with that note, we're closing off 2021 successfully today. I can officially say we broke over 100 of these core summits thanks to you. I don't know how we did it, but I'm going to breathe a little bit. Thank you. 2022 is just around the corner. And I give you this promise, just like we always do. We're going to make it better. We're going to to hear everyone's comments and feedback. We do have a very different schedule for 2022. The Core Summit is January the 26th. It'll be announced very shortly. We're gonna get ahead of this so everyone can participate. Thank you again. Have a fantastic year and wishing you all the very best in your visions and your entrepreneurial and to our ecosystem. Thank you all. And for those who couldn't make it today, all our hearts are with you. You made it come true for all of us. So thank you. Cheers.
Thank you, Oscar.
Thank you.
Great. Thank you for
Thank
the
you.
opportunity. Yep. Thank you.
Have a good night.
Thank you.